So today's lesson is going to be on one of the depreciation methods, and today's depreciation method is the cost method. The cost method can be referred to as the percentage on cost, straight line method, or the fixed installment method. With this method, you write off a fixed amount per year during the life of the asset. So a fixed amount or percentage of the cost price is written off during the life of the asset. One of the formulas that you can use to calculate the cost price, the depreciation using cost price method, the cost method, you will have cost price and then divide that by 1 and then multiply by the percentage given and divide by 100, multiply by the number of months, so that is the lifespan. So it depends if for this financial year has your asset depreciated for the full year. So if it's for the full year, it will be 12 over 12 because that's how many months we have in a year. But if you are depreciated for only half the year, so it will be 6 over 12, your lifespan would be 6. So this is one of the methods, one of the formulas that you can use. Another formula, this is if you're given the useful life, but you're not given the percentage on cost to calculate depreciation. So you would have your cost price, you would have your cost price, and then you would divide that by your useful life. Excuse my writing. And then you'd multiply by your lifespan. So 12 or 6 or 7, depending, on how many months you had the asset for. Then divide that by 12. So these are the two formulas that you could use using the cost method. And then here we have an example. So our example says that balances on the 28th of February 2021. We have equipment, which has a cost price of 45,000. And then we have accumulated depreciation on equipment. And this is at the beginning of the year. And this is our balance for accumulated depreciation on equipment. And then next up, we have information. We give information that we have to provide for depreciation at 15% per annum on the fixed installment method. So our percentage is 15% per annum, and we're using the fixed installment method, which is the cost method. So our solution here would be cost price. We did say our cost price was 45,000. So there we have it. 45,000 is our cost price, and then multiplied by the percentage. So what was our percentage? 15%. So multiply by 15%. This is up for our depreciation. And then to get depreciation for the year, we have 6,750. So when given here any more information that this equipment had only been brought into use or only been purchased during this year. So we had it from last year's financial year. So we don't need to apportion by having the lifespan over 12. So we can just take the cost price multiplied by the percentage, and that will give you your depreciation for the year. And now, if you had to account for it and have journal entries done, you would have to debit depreciation and credit accumulated depreciation on equipment. Both would have 6,750 as their amounts. Thank you.